Greetings, my name is Michael G. Robinson Jr., a housing counselor here at Robinson Financial, and today we will be interviewing Ms. Samaya Johnson and getting her started on her way to home ownership. How you doing, Samaya?
I'm doing well. How are you?
I'm good. How was your day today?
It was well. Thank you.
Awesome.
Yours?
It was good. Good as well. So, last time when we spoke, that you said that you wanted to, thinking about buying a home, you're interested in home ownership, but still have some questions. So, as your housing counselor, one of my main things to do is to help get you situated and give you some trust and clarity about home ownership and answer any questions that you may have. We'll start off by, of course, find out what is your why. Why do you want to purchase a home? We'll talk about credit scores, mortgages, debt to income ratio, uh, closing costs, all things of that nature. Okay. So first, tell me, what is your why? Why do you want to purchase a home?
Well, I've been thinking about purchasing a home, but honestly, I don't know where to start.
That's understandable. What do you think is preventing you from purchasing a home?
Um, I've been renting. The cost of renting is expensive, and really kind of narrowing it down is probably fear. I can't afford a home right now. Been asking myself, should I wait for the market to get better? I don't exactly have money for a down payment, and I can't afford to buy my dream home.
Understandable. So with fear, that's common with a lot of first-time home buyers and people who have been renting and kind of considering purchasing a home. So what I say to that is, the first thing you want to do is assess and think about what it is that you want. I know you're probably tired of renting. You don't want to rent anymore, and also you want to kind of focus on the long term. What it is that you want long term. Okay. So,
That puts my mind a little bit more at ease. I'm still on the fence when it comes to purchasing a home, and then really should I continue to rent? But what's the big difference between renting and home ownership, and how will it affect me in the long run?
gotcha. So, with home ownership is your primary way to build wealth. So, this is what a lot of homeowners use to build wealth. Also, you able to receive tax deductions, and also it gives you the creative freedom to be able to landscape your home, cut your grass, paint, and do things of that nature. For as being a homeowner. Now, when it comes to renting, of course, you'll know what your rent is going to be every month, and also if any appliances break down or you need some fixing on the roof, you'll know that you'll be able to call the landlord to be able to assist you with that. But I want to paint a bigger picture for you. Um, if you purchase a home for $300,000 and your mortgage is $1,700 a month, all things being equal, nothing raises, and you stay in this home for 30 years. So by the time you reach the 30-year mark, that home can appreciate up to $600,000. And so now that is an asset that you own and that you'll be able to either sell, or you can rent it out or pass it on to your children, or whatever the case may be. But you'll own that home, and you will have doubled your money. Now, compared to if you rent, then just say if you find a nice 2 bedroom, 1 bath house, and your rent is $1,700 a month, and you got a good relationship with the landlord, and he or she says, hey, okay, I'll make a deal with you. If you promise to pay the rent the first of the month, I won't go up. And you like, okay, agree. And you, for 30 years, you stay in that home, and you pay the $1,700 rent. And when the 30 years come, that same home appreciates up to $600,000 as well. But the difference is that the landlord will own that home. So if they want to sell it or rent it out or anything, they can do that, but you won't own anything.
I never thought about it like that.
Understand? So now let's talk about credit scores. Do you know your current credit score?
Let's see. in like the mid fives.
Okay. So with credit score, it is a three-digit number, ranging from 300 to 850. So it's basically a snapshot of your response, your financial reliability. Gives lenders a little insight or prediction of how well you are with repaying your debt, and it also influences the security of you getting security cards as well as mortgages.
Okay, so how will my credit score affect me getting approved for a loan, and what type of loans are available?
Great question. There are many types of loans available, such as your conventional home loans, FHA loans, which so your VA and your USDA loans. So your typical conventional loans require a score of like a 620 or higher. For your FHA loans, which stands for Federal Housing Authority, those may qualify you as well, and with a score as low as 500 with a 10% down, or a 580 with 3.5% down. Now, are you in the military or have been in the military?
No.
Okay. Well, if you had been, then you would probably be able to qualify for the VA loan, and they also have the USDA loans for those that live in the rural areas. Um, those credit scores require from 580 to 640 with 0% down.
Okay, well, I mean, that's good information. I didn't know that. But can you explain to me about mortgages and something called debt to income?
Certainly. So a mortgage is pretty much a long-term loan that's used to purchase a home when the property itself just serves as collateral. As a matter of fact, as this past April, the average rates of 30 years mortgages, they've averaged about 6.13, 6.13 to 6.46. So when it comes to mortgages, there's a term called PITI, P-I-T-I, which stands for principal, which pays off the home, the interest, which pays off the lender, the taxes, which goes towards your state and local entities, as well as the insurance, which protects your home and your investment. And so, debt to income ratio is when the lenders prefer that you have your debt payments between 43 to 45% or less of your gross monthly income.
So then, what does the home buying process consist of?
So, great question. First, the pre-approval process is where the lender reviews your last 2 years of your tax returns, bank statements, pay stubs, and also gives you a formal letter for what you can borrow. So this letter is usually valid for about a good 60 to 90 days. Next is when you begin your hunt or your process for looking for a home. And then after that, if you're accepted, then you'll be able to submit your loan application for the property that you're interested in. Then the lender or the underwriter then verifies all the details and orders a home appraisal for the home that you're interested in. Lastly, you'll finally sign your documents, you pay your closing costs, which is usually about 2 to 5% to purchase of the home. And then after that, you're ready to receive your keys and ready to move into your home.
Okay, well, it sounds like I have a little work to do, so where do I begin first?
Awesome. So the first thing we want to do, we want to set up some what we call SMART goals. So SMART meaning specific, which is when you want to define where you want to stay at, what home you want to live in. M, which is the measurable goals. So, for example, with this, you said your credit score is in the 500s. So, what's a good score that you think you want to raise it up to be able to qualify?
I'm thinking maybe 680 to 7.
Awesome, awesome. So that would be your measurable goal. Next, your A is your achievable goals, something that you think that you can do, especially when it comes to raising the capital money, and how much you think you can set aside for each month. R is how long you plan on living in the city or living in that home.
Okay.
And T, which is the time, is when do you plan to have your pre-approval letter in hand? So, for example, if says what is this, April 2026, you start working on everything now, then it say about a year from now, you want that would be your time frame that you want to have your pre-approval letter in hand.
Okay. Well, thank you so much. I truly appreciate all this information. Is there any way that we can set up a time to meet next week?
Most definitely. We could definitely do that. I'll make sure I give you my business card before you leave. And so, for some homework for you, what I want you to do, I want you to go home and write down all of your living expenses. So, once you come back, that we can work on putting a budget together for you and also work on devising a plan so we can go ahead and get things in order and in action for you. So, you have my number, you have my card.
Thank you
So
much.
definitely give me a call, or if I'm not here, leave a number with my secretary so we can get you scheduled in the book. Hopefully, if next Thursday works for you, that'll be fine.
Thank you so much. It was.
Look forward to hearing from you soon. Take care.
Yes, sir.